Good morning, traders. It is the 20th of September. It is Friday. Welcome to a webinar. Hope everybody is doing well. I wasn't going to do a webinar this morning with it being Friday. Don't usually do them on a Monday or Friday, but quite a few of the opportunities that we looked at yesterday came off. And so I wanted to run through the charts and go over those opportunities, see if anybody got involved with them. As usual, this is YouTube live, so there is usually a 10 to 15 second delay. And that's an alert for a potential trade. Sorry guys, I'm going to have to wait till that stops. Otherwise, if I turn my phone off, it's let me see if I can mute that 1 second. There we go. There we go. Okay. Because I'm working from the laptop, that means I've got my phone on, which is I'm monitoring the chat through there. So good morning to you guys. So this is YouTube live, 10 to 15 second delay. As mentioned, if you do have any questions, pop them in the chat. If you'd like me to look at any charts out there, please let me know. But just give me a yes if you can hear me okay and you can see the screen. Forex factory calendar is what you should be looking at. And the only news out really that I would pay attention to is the CAD news, the core retail sales. But I would be a little bit wary as to unscheduled news events, for instance, what's happening in Brexit and everything to do with the pound at the moment. So be a little bit cautious with that, particularly holding anything over the weekend on the pound pairs, guys. Be very cautious about doing that. We never know what unexpected news could happen. This is Britain after all, and Brexit. So let's crack on with a few of these potential trade setups. Let's go and take a look first of all at what we're looking at. Well, we'll start from the left. So we'll take a look at the pound CAD. And at the pound CAD, what we looked at the other day was this potential breakout pattern. And we said that if we saw a breakout, we could look for a potential pullback and a chance to get long. Morning, everybody. And that's exactly what's happened. And you can see from the last webinar, those of you that were here, we said, first of all, that we could see anywhere here, a double bottom. Well, we actually saw a double bottom just here, a little bit higher up. We saw the breakout. What did we do with that breakout? We then saw a pullback to exactly the area that we were looking at. Unfortunately, I could not get involved. The very simple fact that there was no RSI confirmation. So I could not get involved in that move. And what we've done since then is we have again broken to the upside. So guys, I'm going to do the complete top-down analysis here so we can get a full perspective on what's been happening on this trade. So you're going to have to excuse me. I still have a sniffly nose. I'm still in England in my parents' house with their very thick piled carpet. So apologies for the sniffing up. It's the dust. So we've been looking at this 250 pip move to go higher based on this very nice looking garlic pattern. And we did actually hold structure. So if I put a structure level in down here, you can see structure has been held. And if we zoom in, we did have a head and shoulders here. So directional move, pullback. We did, you could look at this as the left shoulder as well. Then we had the move lower, then a potential rotation in trend, and then boom, we're now in trend bullish. So lovely head and shoulders here. Unfortunately, just here did not offer me an opportunity to get involved due to the size of the pound CAD movement. Even if I got involved with the dailies, which I'm not allowed to do, there was hundreds and hundreds of pips up for risk here. 350 pips up for risk. So couldn't get involved in the head and shoulders, but doesn't matter. We have a garlic pattern. We have a head and shoulders. We are now in trend on the daily time frame. We have a high probability of still reaching our target, which is up here some 200 pips away. So still interested in long opportunities here, guys. So let's drop down to the 240 time frame. So 240. This is what I was interested in the other day. We'd had a directional move. And we'd had a triangle like this. Now, there's a couple of problems with it. 1, 2, 3, 4. Let me do that again. 4. Nope, doesn't want to do it. 4. Nope. 4. There we go. Correct arrow. Now the problem for me was that we were at this psychological number and I needed a confirmed break above, close above that number in order for me to get involved with the trade. So guys, do me a favor, let's get a little bit of interaction going here. Now that we've had a confirmed break above, close above, first of all, our structure levels here, and we've now broken above the 6600 psychological number, what am I now waiting for to get involved with the trade? Pop it in the chat for me. Let me know, those of you that have done the educational material, what is it I'm going to be waiting for? And those of you that don't know psychological numbers, I don't take breakout patterns at psychological numbers because they have a far lower win rate. We typically see a bounce off them. Psychological numbers are numbers that people trade of, that people hide stops behind, that people take targets at. And even though we have a breakout pattern at that level, we have a lower probability of it going on to win. So Simon says a retest. John says a pullback. Mickle says a pullback. Double bottom for Ashraf. A little bit more of a conservative entry for Ashraf. All of them are correct. We've now had confirmation the market can go higher here, guys. So very simple. I'm going to be waiting for a pullback. Now, I'm going to throw on some targets first of all. So from our swing low to our swing high to our swing low even. Make sure that we have not hit that 127 fib. And you can see we have not, we've fallen short of it. So I'm still able to get involved with this trade. And just before we look at entries, we could first of all, if we get a pullback to this area, look at first targets at the 127. And if you wanted, hold second targets for a retest of those highs. The problem I have with breakout patterns is that a lot of the time when we hit the 127, we see a reversal. And that reversal typically comes down to stop the second position out. So it's a decision whether you want to take your whole position off at the 127 or whether you just want to hold it for the full extension or whether you go for two targets. So that's for target. So there is room to go. We have not hit our projected area. So I'm actually now just going to drop a time frame lower from the 240 to the 60 and look for that pullback. And guys, if we're looking at a nice area, does everybody agree that just here? It's a shame we never got a pullback here. But anyway, this lovely double bottom. How many times do I say, guys, look out for the retest before the breakout? Many, many times. And that double bottom was confirmed with this big bullish candle. I do actually think I posted this in the chat, guys. I think the reward to risk was no good for me. We never got a pullback for a 26.18, but it would have offered you a very nice opportunity to get stops under here. But what we've done as a result of that double bottom is boom. This was a confirmed break above, close above this level and this level. So this technically is the outside return right here, guys. This is the outside return right here. So what we've now done is we had the pullback, we've had a new high, and now we're seeing a pullback. So very simple. We have lots of higher time frame confirmation here, but if we break it down, we basically have a little trend continuation trade which is valid on the 60-minute. It's valid because from this double bottom we had a violation, a break above structure, and that gave us an initial structure high. So those of you that know how to retrend, this is an initial structure high. Then this pullback straight here is a potential outside return. And as we go up and we physically make a new structure high, then this is now called a new structure high, officially giving us a 3-point move and officially putting us in trend. So with that said, we can simply look for our 3 ways to get involved with a trend continuation trade. We can look for a first chance entry, which is going to be one of 2 rotation patterns, a double top, or we're going to be looking for a head and shoulders. Second of all, we're going to be looking for a second chance entry. So that's where we're allowed to drop one time frame lower. So we would be allowed to drop to the 15-minute, and we would look for a higher high, higher close, or the last chance entry would be within the wicks, within the last chance down here, and we would again look for one of those two rotations patterns. Morning, Stuart. Can't stay long because I'm going out. Well, enjoy me while you're here. So that's what we're going to be looking for on this trade. Now, we can be more aggressive here, guys. Daily Gartley pattern. Daily in 240, confirmation of rotation in trend in terms of a head and shoulders. We have a 240 or 60-minute breakout pattern. We have a 60-minute trend, okay? Very, very high probability that we're going to go higher on this potential opportunity. So we can look initially with stops underneath here. I will say that the safest opportunity is below this double bottom, but unfortunately the reward to risk isn't going to work out on that trade. However, 60-minute trend continuation opportunity, we're allowed to drop one additional time frame lower, and that's exactly what we're going to do, down to the 15. So what I'm noticing here on the 15 is I thought for a minute we double topped. But if you look here, guys, this is not a valid double top. And the reason for that is this touch here did not come up to test the closes of the candles. Therefore, it is not a valid double top. And those of you that have been with me, please tell me why I could not have taken this trade if it was a double top. But luckily it isn't, so I can still get involved with the trade. But does anybody know if it was a double top, why I cannot get involved with that trade? Well, if you don't know, very simple. A double top is a rotation pattern, and it's a rotation in trend. So what it actually means is that if this was valid, price tried to push higher and physically couldn't, and then it was beaten back. So we had no confirmation the market could go higher, and it would ruin any trend continuation opportunity. It's a shame that this is not a valid flag pattern, because we could have used that, but if you look, it doesn't meet the rules. So we are quite simply going to be waiting for the market to come into this price reversal zone. Give me some ideas, guys, of what else we could use to get involved with this trade. Something else that could be setting up within this price reversal zone. What can we look for? What would give us additional confirmation, or would give us another strategy to get involved with the trade to look for those long opportunities? We went over this this week, where we looked at pretty much every strategy. Anthony says head and shoulders. Yeah, that's a possibility. I'm looking for a more simple strategy than a head and shoulders here. Head and shoulders is fine. Head and shoulders would need to be if we come into the last chance entry. And head and shoulders would be this. We'd need to see a pullback before we came into structure. Then we'd need to see a move higher, then another pullback, and then a move higher. So we'd need to see a lot of movement here on the lower time frame for a head and shoulders, but I'm looking for a more simple strategy, a more simple pattern. ABCD pattern, yeah, exactly, there's one of them. So we could look for something like this. What other pattern could we look for, guys? So ABCD pattern down into structure. What that would give us is it would come into a psychological number, 16600. We can then look for additional confirmation. We can look for the RSI. We can look for some fib confluence. We can look for a 3-bar reversal, a double bottom. Ashraf has got it, an advanced pattern. Exactly. That's another one we can wait for. So X to A to B, B to C, CD completion down here. So lots and lots of opportunity on this trade, okay? If we don't get a first chance, second chance, or third chance entry, we can simply wait for an AB equals CD pattern, a bat pattern, a Gartley pattern. We come down and have a double bottom as as who said it? Anthony said we could look for a head and shoulders on the lower time frame as well. So lots and lots of opportunity. We simply just have to wait. Now the downside about this is it is Friday, and as mentioned, I don't really want to hold any pound pairs over the weekend because of all the uncertainty, particularly a pound pair like the pound CAD, which has a very big ATR, can be prone to seeing some big gaps because it doesn't have a great deal of liquidity in it. So if we were to get involved with this, I would need to be out by close of business this evening. Now that is certainly doable. You know, we could see a rally up here over the next hour, and then we could see a move lower over the next hour or two. That would take us till 1, and then because we have a lot of confirmation, we could see a continuation and a big breakout because of the breakout pattern. This could theoretically hit by close of business, but either way, I would need to be out for close of business. So lots and lots of opportunity on the pound CAD. So I'm just going to make a note of this. So pound CAD. If we were to come, say, and get a second chance entry, what would we be looking at in terms of the reward? If we got it, say, here. Wow, 100 pips. Okay. Not for the faint-hearted, guys, the pound CAD. Not for the faint-hearted. So, pound CAD, bull, lower time frame. Okay. That's what I'm going to be monitoring. Any questions on the pound CAD, guys? We got the move we talked about in the last webinar. Fortunately, it didn't quite give us the entry. But if we can be right on the move the majority of the time and we are consistent, eventually we will get our entry and we will have some winning trades. Going to bring over the dollar yen now, guys. We have an at market low and tight flag. The entry for me personally was at 3 in the morning. So I was fast asleep getting my beauty sleep. So let's just do the higher time frame analysis on the dollar yen. So drawing out the trend, guys, from this level, move lower, pull back, move lower, pull back, move lower. We saw a pullback and then we saw a move lower. And then we just about saw a move lower, and then we've now come up to this area. So there's no real trend here, guys, but we are very close to this higher structure level just here. Let's drop down, just before I drop down the time frames, actually, guys. RSI has gone overbought at just over 80, and we are currently trading at, I thought it was at a psychological number. Oh, okay, we're trading at a psychological number 108. So let's drop down to the 240. We don't really have a great deal of higher time frame confirmation there. And if we just look at what price action has done, we had a move higher, pullback, move higher, pullback, only just made a new high and then a pullback, and then only just made a new high as well. And then we've just broken to the downside with this lower low, lower close candle. Let's go to the 60 here. So here on the 60. All we've got is a directional move, and we've got the market adhering to this trend line. Now, it isn't the nicest looking low and tight flag. For me, low and tight flags are the most profitable when we're in trend or when we just violate structure, at a major level of structure. That we haven't done here. But this is set up with valid 2 touches either side. We have not come down to test the closes of the candles down here, so there is room for this to come lower. It's lower probability for me because we don't have any higher time frame confirmation. And again, these usually appear when we're in a heavy trend, and we haven't really done that. Take care, Stuart. But a valid opportunity here, particularly if we come back up to this level. It will give you a very nice reward to risk for this low and tight flag. Let's crack on. I've got a couple of appointments this morning, guys, so I don't have too long. As I say, I was going to just do a quick hit review video, but because quite a few of these trades have played out, I wanted to run through these today. So we looked at this big breakout pattern. You can see it's now rallied up to hit targets. I said that, well, we actually had the risk drawn out, but initially the risk was down here. The risk was below the middle of this breakout pattern and this double bottom, and I said that that was the safest area. But what we did is we then reduced it and said that we could look for a double bottom here. So the trade played out lovely. Let's go and take a look at the dailies. And you can see that we've had this double bottom down here, and as a result of that we saw a big bullish move. Where did we see the move to? Well, we'll just draw out the trend. I won't draw all of it out, but move lower, pull back, move lower, pull back, move lower, pull back, move lower, the double bottom, the move higher. So now I can easily see where the outside return is, and I'll go and highlight it, and we can now see that we are up within that outside return area. We're right up in the tops of it. Morning, Marcus. So we're right up in the top of it, so let's drop down to the 240 time frame, and this is where we had that breakout pattern. So this breakout pattern looked like this, like so. Let's go down to the 60. I think we can see it a bit clearer on the 60. And we spoke about this entire level here that had been held. We saw a move lower before we saw the breakout higher. So wasn't one for me, unfortunately. Didn't give me the best reward to risk and then no entry. But it's another trade that did go on to win that we spoke about. I think this was about a 60 or 70 pip winner. But I've got nothing now, guys, on the pound dollar. We are literally up within these highs here, and we need to wait and see what the market does. Is the market going to go higher, or are we going to hold, and are we going to reverse? So back down to the dailies. We're just going to wait, guys, and if we do get that confirmed violation up here, well, we could be looking at a big rotation in trend. Okay, could be seeing a big rotation in trend. And I've noticed that with quite a few of these pound pairs now that they're double bottomed on the dailies. Okay, big rotation on the dailies. We could be looking at big daily swings and big daily rotations, particularly since Brexit is kind of coming to an end. When that ends, then we'll see some more stability. But this could be an indication that the pound came as low as it could, and we could see the reversal. But we've got to wait for the confirmation. Got to wait for the confirmation. What else do we have? Pound yen, nothing really to talk about there. Euro New Zealand, not much. Come back to the euro yen. Aussie dollar, guys. Posted this in the chat this morning. I am short this trade. Currently 7 pips up. That's the low and tight flag. 15 pips for 39. Those of you who got in it as well. We'll come back to that one shortly. I want to run over a few of these trade ideas that we spoke about. Let's do the New Zealand yen. I didn't post this in, guys, because we were at another psychological number, but a beautiful triangle here, guys. But it came in at dead on 6,800 flat. I had the option to get involved last night about 8 o'clock just up here. But again, as per my personal rules, I have tested these breakout patterns at psychological numbers, and they are lower probability, so I don't take them. Not unless I have the confirmed break, and then the pullback, and then the short. And I mentioned this in yesterday's webinar. Pretty much every 6 weeks or so, we see the market consolidate. And that's when we really start to see these breakout patterns. So they don't happen every week for me, unfortunately. It's roughly every 6 weeks we start to see a lot of the currency pairs. After expansion, they start to contract, they start to coil, and they get ready for the next expansion. And that's what breakout patterns are. And this was only on the 15-minute, but lots and lots of breakout patterns that have happened. Unfortunately, this time around, haven't really got involved in many. And quite a few of them have now gone on to win. Most of them occurred at psychological numbers, and I just couldn't take them. Just couldn't take them. But a beautiful setup on the New Zealand yen. Did anybody get involved in this yesterday? I feel like I'm doing a lot of talking this morning. 1, 2, 3. Just look at that. 3 tests either side. Perfect coiling effect. This level here did not test the close of the candles. This level did not test the closes of the candles. We'd held structure down here. Boom, broken to the downside. Bigger picture, bearish. And when we see one of these breakout patterns, guys, we typically see more. So keep an eye out for more of them. Yeah, nice move. Not a very big trade. Nice to see them come off. You know, I've had a good while of crap trading. Nice to see some of my trades coming off. Just wasn't involved in many of them, unfortunately. My New Zealand dollar trade came off though. Banked 123 pips on that this morning. It was very nice. Nice to wake up. That was the trade as well, where I'd put some more money into trading and it had quite a big position size on it. So that was very nice for that to come off. What else do we have? I think there was a few more, wasn't there? That's the New Zealand dollar, the move that we had. We also had... We'll come back to the euro dollar because that's still a potential breakout pattern. Aussie dollar CAD, my trade lost, my head and shoulders lost yesterday. Okay, so let's start again. So Marcus, just to let you know, dollar CAD, still looking for a long opportunity. I don't think you was in the room when we did it, but daily Gartley pattern, daily confirmed head and shoulders, 240 confirmed rotation in trend, 60-minute breakout pattern with a confirmed violation. We're looking for the pullback and we're looking for a long opportunity on a 60-minute trend continuation using a 15-minute candle. I know that you're going to be extra cautious with this being a pound pair, but I will not be holding any pound pairs over the weekend due to the uncertainty. So if I can get an entry today, great. If not, unfortunately, it may be another trade that slips through the fingers. Dollar yen, we've got that potential low and tight flag. Pound dollar we've just done. Pound yen's not worth talking about. Neither's euro New Zealand. Let's do the euro yen then, guys. Euro yen, there is a potential breakout pattern here. And let's go and do the high time frame analysis. So bigger picture here, we are still looking bearish, which kind of conflicts with our pattern. So it may not be one for me this. So bigger picture, move lower, pull back, move lower, pull back, move lower. And we did see a pullback to this level and then a move lower, and now we're seeing a pullback right up into our outside return, which is here, and we're actually right up within the wicks just here. But bigger picture here, guys, for me personally, there is room to come lower. If I put a structure level on at this level just here, this key level of structure at the closes of the candles, then you can see we actually failed to come down to that level. If we drop one time frame lower, this has not produced a double top to short the market, so I don't have any way of getting involved in a short position. But this is a bullish breakout pattern that we were potentially looking at here, and might be on the 60 that we can see it better. Yeah, so here on the 60 we have a clear swing in the market just here. With these clear swings and directional moves, we can say that we could see breakout patterns. If we draw this out based on the closes of the candles, I actually now don't think it's valid unless I looked at it on the 15. So we'll just stay on the 60 for a minute. First of all, if we come lower, we have X to A to B, B to C, CD completion, giving you a very big and lovely back pattern there, guys. I'm just wondering if my pattern was on the 15. So let's drop down to the 15. So on the 15, Yeah, I don't think this is going to be valid now. We've got a beautiful trend line structure here, guys. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. Currently retesting 10. Directional move. Valid low and tight flag. There we go, guys. We have a valid at market sell for this pattern. Look at this trend line. High probability the market can come lower. There's room for the market to come down to this level. What is the reward to risk on this trade? Actually, I'm just going to triple check this. We've got those tests there. We had the market. Let me leave my crosshairs on. Okay, let's go back to the 60. Not valid on the 15. Oh yeah, I think it's going to be valid here on the 60. Redraw this on the closes of the candles. So what have we got? We've got 1, 2, 1, 2, 3, 4, 5, 6. So this is now a valid low and tight flag. Where's the pole? Okay, we've got psychological number, so 127. Just let me go back to the 15, see if I can see clearer where the pole is. Yep, the pole is from this level just here. So I need to reduce that down a little bit. So there, let me go back to the 60. What's the reward to risk here, guys? We would be looking at about 8 pips above that level. It's going to make it 21 for 17. Okay, I've got an inverse reward to risk here, guys. However, I do think we can get a bit more out of this trade. I think we can rally down to this level on the 60 minutes. Let's just go down to the 240 a second. Yeah, there's room for this to come a lot lower, guys. That's the 15. Okay. Not changed my positions on these, have I? Sell at markets. Okay, so back to the 60. Stops. I'm going to want 8 pips above this level, so it's going to put me at 47. And I'm actually going to be playing for a little bit past that 127 fib. I'm going to be playing for 2 pips above the closes of the candles, and that's going to be 5 pips above that psychological number. However, if we come down and hit that 127 target, I will be moving to break even. Okay, guys, so valid low and tight flag there using trend line structure. So just zoom out. Let me just get rid of this. So using trend line structure with room to come down to the lower level. Let me just do a screenshot of that. And we're looking at about 22 pips of risk for about 20 pips of reward. Let's just do a screenshot. Does everybody understand the rules that we've used here to get involved with this trade and why the trade was valid? If not, say no now, because I will delete everything off and do the high time frame analysis again clearer. So apologies if I was a little bit all over the place. I do like to talk to myself when I do these trades. But if anybody would like me to run through that again and specifically go over the rules, let me know. Yes, please do. Okay. Delete daily time frame. So bigger picture here, we're looking at the market coming lower. The reason for that is we draw out the trend, move lower, pull back to this level, move lower, pull back, move lower. This for me was a little outside return here, and then we had the move lower, and then boom, we've come up. So if we highlight the entire outside return, which is here, we can see we're actually in the last chance entry, which is the wicks up here. So at this level, we could see a reversal. Now here on the daily time frame, please type in what type of candle this is. Just type it in the chat. Tell me what type of candle this is, or what the candle has actually done in relation to the previous candle. This candle, because we are up at previous structure, we are up within the wicks. This candle is an indication that the market will go one way or the other. Yep. Lower low, lower close, and a bar reversal. Exactly. We've actually got what looks to be a little 3-bar reversal here. So we've got this big momentum candle followed by an indecision, followed by a lower low, lower close, giving us not the sexiest 3-bar reversal, I've got to say, but it's got a lower low, lower close. Now that lower low, lower close and that 3-bar reversal at previous structure is an indication that the market could be reversing and we could see a move lower. So on this time frame on the dailies, we could see that move lower. Let's drop down to the 240. Here on the 240, if we look left, this is our previous structure level, okay, and this is where price is currently trading at, and we have physically held structure. So we have no confirmation at this stage that the market can go higher. Is there any candlestick formations here which indicate that price can come lower? Not really, not anything I'm really that interested in. If we do drop down to the 60-minute though, and we look for structure, well, we have this trendline structure like this. Okay, beautiful level. 1, 2, multiple tests here, multiple areas here, here, and that's where we're currently trading at. So there is the trendline structure, which is clearly held multiple times. Higher time frame structure is held. We've got daily confirmation with the 3-bar reversal and the lower low, lower close. So everything here is indicating that we can go lower. The question is, how do we then get involved with a short opportunity? And if we zoom in, and I'm just going to clear this up a little bit, then, and I'm actually just going to fatten it up a bit as well. Then right here we have got a fairly directional move lower, and we have got the market moving sideways. That sideways movement is an indication that the market is consolidating before we see a breakout. For a low and tight flag, we need minimum of 4 touches. 1, 2, 3. This would be 4. We came down for 5. This would be 6. The next thing we need is there room for the market to come lower? And if we look at previous structure is down here. So yes, there is still room for price action to come lower. So let's throw a fib on from our swing low to swing high, and we'll put on the 127 fib, and we bring back on the orders. And so we're now involved with that trade. Stops can go anywhere above the high depending on your back testing. I typically do not go a full ATR. The ATR is 11 pips. It's very rare I do that. Typically 5 pips is enough depending on the currency pair and the spread. I've actually given this a little bit of breathing room. I've gone 8 pips above that level. And so, yeah, a valid opportunity here. Lower level of structure just here, so I'm actually playing just beyond that 127 fib. But again, guys, if we do come down to test that 127, I will be moving to break even. So we managed to get higher time frame confirmation. We had 240 or 60-minute trend line structure, which is held multiple times. We've got a low and tight flag, and we've got room to go down to targets. Simon says, why wouldn't you take the trade after the fourth touch? Yeah, I would. I've just only seen it now. That's all. No, the fourth touch would be the valid touch for me. So this level just here is the fourth touch. And for me personally, my entry would then have been the red candle. So if I was around, I would have used this as the entry. I would have gotten a better reward to risk. Unfortunately, I wasn't. This entry, the fourth test, happened at 3 in the morning. And then what we've done this morning is we've come back up and not got the best reward to risk. And I'm having to play for a bit of an extension, but very, very high probability trade. Yeah, just missed it. That was all. Any more questions on this opportunity? Oh, excuse me, guys. So let's go and take a look at something else. What else can we take a look at? No problem, Simon. Again, still in the Aussie dollar CAD, guys. This low and tight flag, 15 for 39. We've had a lovely lower close now. Isn't the highest probability low and tight flag. I'll just run through this, guys. Let me delete this off. Isn't the highest probability, but 15 pips for 39. I'm very happy to take that trade. So let's go out to the dailies. But I think what you guys, what I'm showing here is that, like I said, every 6 weeks or so, we tend to see that rotation. We tend to see those breakout patterns. And the latter half of this week is exactly what we've seen. And we're still seeing them today. Majority of them I couldn't get involved with. But it's good to see that this is how the market moves. We have expansion where the market trends. We have contraction where the market consolidates. Expansion, contraction. That's how the market moves. It moves in fractals. It moves in just expansions and retracements. And it happens on all time frames, on all currency pairs. And every 6 weeks or so, I tend to see very good breakout patterns. And I think we're just starting to see that kick in now. So here on the Aussie dollar on the daily time frame, higher time frame analysis, structure level on at our most recent level of structure. We had structure being held, and then we had a confirmed break above, close above this V point just here, and then we're seeing the market retrace now down to the 240. And here on the 240, what you can see is we've kind of had this relatively directional move, and then we've had this kind of arching effect where we're struggling to make new highs, and then boom, just here, we had a break below, close below, a pullback, and then boom, we've come lower again. So let's just drop to the 60. And you can see then that we've violated all these levels of structure. So we violated some major levels of structure here. We've got a 3-point move, so we've entered trend. And with that trend, we then have a swing in the market just up here, a directional move, and then the market has adhered to a minimum of 2 tests either side of the trend line. So 1, 2, 3, and 4. This one, Simon, I was able to get involved just in time with the 4th test. I'm going to throw a fib on from the swing low to swing high and look for that 127 extension. There is no psychological number that would stop me. No psychological number that would stop me from taking the trade. And if I just zoom out a little bit, try and reposition this correctly, bring back on the orders. Then you can see here that 15 pips for 39, I'm playing 2 pips in front of that 127 extension. Now, wasn't the highest probability trade if I put a structure level on just here. What had happened was we'd actually had this level of structure right here, and I was concerned at that level of structure as to whether or not this could be a valid double bottom, or whether or not this would be a low and tight flag. So it's a lower probability because we come into this minor level of structure, but even if this opportunity has a 50-50 chance of winning or losing, but I've got a reward where I'm only risking 15 for almost 40 pips, almost a 3-to-1, then I'm very happy to take maybe just a 50-50 chance on this trade. So yep, we violated this level of structure. We've got a 3-point move. It was just that it came into this minor level of structure, so the reward to risk was in my favour, and only a 50-50 chance maybe, but very happy to take it. Simon says, do you ever see winning flags at areas of consolidation, or would you just not look? Yeah, I do. We had one on, where was it, guys? Was it the pound Aussie, where it was 20 pips for about 70? Because on that instance, that was beginning of this week, I think it was, Monday or Tuesday. On that particular setup, we could have played for extensions, but it happened within consolidation, within an area where we don't usually see flag patterns. But it double bottomed and it came off beautifully, but I didn't get involved because of that reason. It just didn't form within the type of trending market that we usually see them. To say that they don't need to form in a trending market, it's just typically that's where we tend to see them, and just the current setup of the of price action just wasn't what we typically see. But that's something for you to go and test, Simon. That's my personal preference. That's how I've tested it. That's how I read structure and how I understand it. But that might be different to how you do it. And there is no right or wrong. It's simply how you interpret the market and if you have a profitable system or not. Ashraf says there is psycho number when you entered the trade 6,800. No, there isn't. The 6,800 is actually here, and as you can see, price action has broken below it, so it's near it, but we actually broke below it by 20 pips. Marcus says, Ashraf, I think it's okay as market already closed below 6,800. There you go. There we go. So that's the Aussie dollar. Euro yen back at break even. New Zealand yen came off. New Zealand dollar, beautiful trade that. Pound Aussie. I'll do a few more currency pairs, guys. I really just wanted to run through what we'd been talking about. Okay, I'll run through 2 more currency pairs. The next one we're going to do is the euro dollar. Here it is. Okay, we could, emphasis on could, see a break to the upside, but also could see a move to the downside. So this again is a potential breakout pattern, but it's unlikely it's going to be for me. Ashraf says, is because it's low probability trade, you have not sent the trade as signal. What was that for? The Aussie dollar. Did I not send that one out as a signal, guys? Did I only post it in the trade chat? I'll check. I may have only posted it in the trade chat. Simon says, great, thanks. I'm testing now and just finding I need more filtering as I'm at 50% win rate and would like to find better rates. Yep, okay, it's fine. I have lots of filters on the educational material. I think you have been through it, Simon, but I'm not 100% certain, but there's lots of filters on there. So, euro dollar, let's go and take a bigger look at this. Bigger picture, I was looking bearish here, but we've retested the lows, and I'll show you what I mean. Move lower, pull back, move lower, pull back, move lower. We're seeing a pullback. The problem here is we have now retested or double bottomed this area, and so I am now no longer looking for short opportunities. And if we just zoom in and see this, guys, I'm just going to leave it highlighted. These candles, consolidation, okay? Tight consolidation. That means on the lower time frame we're compressing, and it's very likely that that compression, that spring-like compression, is going to explode, and we're going to see the spring bounce open, and we're going to see a rally. So I can't look for any short opportunities because of the retest, the double bottom, but as we go through the time frames, you'll see we don't have any confirmation the market can go higher either, so isn't going to be one for me, even though it's looking like we are going to see some form of breakout. So first of all, we could see here what looks to be a Gartley pattern. X to A to B, B to C, CD completion down here-ish, just after the 786. If I delete this information off. And what we also have is the market adhering to this trend line. It's had one test, 1, 1, 1. This candle right here was a lower low, lower close candle, indication that we could see a small pop to the downside. We also have the market currently doing this, or you could look at it at being a bigger breakout pattern like this. We need to reposition this so it's on the closes of the candles, just like that. Okay guys, so lots of movement, lots of compression inside. Look how tightly we're coiling, okay, very, very tightly. Okay, the tighter we coil, the tighter that spring is going to be, the bigger the breakout. Now, bigger picture is, actually guys, there is actually room here for this to go higher, you know, just looking at this. Okay, if I put a structure level on just here, right here, this level of structure, then this candle was a confirmed break above, close above. So it's an indication that the market can go higher. So the next level of structure the market could potentially go to is this level right here. So this may be a valid opportunity for us here, guys. So from the swing high to the swing low, we're looking for that 127. And if you look here, guys, and I move the structure level up to the tops of that candle, to the top of structure, you will actually see that targets will be a retest of those structure highs. So actually, guys, I think we have a valid opportunity here. 1, 2, 2, 3, 4 down in that level. So this is on the 240 time frame. So just before I drop down the time frames, let me catch up with the chat. Simon says, yes, come on, target ones. Marcus says, did you already discuss Aussie dollar yen 60 minute? No, I didn't. We'll take a look at that. So again, guys, notice the difference in notice the difference in the markets. Just lots of breakout patterns, you know, the 6 weeks, 4 to 6 week cycle. That's what we're seeing. What are you waiting for target ones, Simon? That's why I just had a quick look at my charts, see if any of mine had just rallied towards targets. You got me hoping then. So we're going to be looking for an entry within this very tight consolidation area just here, guys. Euro dollar, I'm happy to hold over the weekend. And if we can get involved with a trade here, this is going to be a beautiful 108 pip trade. Beautiful 108 pip trade. Let's go down to the 60. Okay, not too much here right now. Just highlight the wicks. Look for price action to come a little bit lower. Go down to the 15. Yeah, no real entry right now. But here on the 15, you have this double bottom just here. So this would actually offer you quite a nice area to hide your protective stops behind. Let's just go back to the 240. So on the 240, you could wait for a higher high, higher close. You could be a little bit more aggressive and just wait for a green candle. You could actually enter in right now, guys. The reason being, and I actually may do this, I'm just going to check out the reward to risk. So we need a minimum of 4 tests, don't we? So this is what? This is 1. This is 2. This is 3. This is 4. So anywhere after the 4th test I can get involved. And on the 4th test, we then had a bullish candle. So that was my entry. So anything after this, I can actually just get involved with the trade, as long as it's not putting in some type of reversal pattern. So yes, this couldn't be an at market buy for us to get long at, guys. Let me go down to the 60. So stops can go below this double bottom just down here. It's going to give me risk of around this much. 13 pips below that level is going to make me 23. Is that right? 13 pips below there. 13, 24. Yep, so that's going to be my risk. And my reward is going to be up here at this level. So let's make that red for risk. I'm going to get involved with this trade now, guys. Let's have a look. Okay. I'm going to front run this by 3 pips, so it's worth 103 pips, guys, this trade. So 28 pips for 103. 105. Let me go back out to the 240, guys. So there we go. We do have on the 240 time frame, as mentioned, this candle right here, which was a confirmed break above close above this level. There is room for it to go higher. We have confirmation of a compression pattern. We have a lower time frame retest, which we can hide stops behind, which go in ATR below that level, and gave us a very nice opportunity there, 28 for 105. And don't forget, we've already seen a lot of these patterns win. Just personally couldn't get involved in them. Any questions on that, guys? I'll just keep checking on the pound CAD, guys. We have had a higher high, higher close candle for a second chance entry, but the reward to risk is no good. So I'm going to set an alert. Euro yen going the wrong way. What do you do? Aussie dollar, New Zealand dollar, pound New Zealand, Okay. Euro Aussie guys, there is a potential flag setting up just here. It isn't coming into a structure level though that I'm happy to take it at, but keep a look at that. Take a look at that if you want, guys, on the 60-minute. I'm going to have a look at the Aussie dollar yen. Aussie dollar yen. It'd be lovely to get that couple of these trades winning. I'll be well on my way to get myself out of this drawdown then. Excuse me. Still house hunting, guys. Viewed a couple of houses last night. Still on the scrounge for a decent house in this area. Those of you that don't know, I'm moving back to England for a period of 18 months to 3 years. I've got the opportunity to make a lot of money over here. Non-Forex related, guaranteed income. Self-generating income. So I will be moving back, and I am house hunting on my own. I've had to leave the wife in Spain with the kids. For some reason, this does not want to load. I did type in Aussie dollar Swiss, didn't I? I'll just give it a few more seconds before I try refreshing the page. Is it still at market, Marcus? I know you posted one in this morning. Was that the Aussie dollar Swiss? It was close to hitting targets, that, wasn't it? Marcus posted another breakout pattern in this morning. Thanks, Simon. It's great to be back in the cold. I was up at 5 this morning. I'm actually staying at my parents while I'm house hunting, and just around the corner there's a great big park, great big clough, and I was out on the bike at 6 this morning. It was freezing. There was frozen fog, frozen mist just lying low over the grass and the trees. It was damn cold. I was wrapped up to hell. Right, this Euro Aussie doesn't want to change to the Aussie dollar Swiss. Let's see if anything else is frozen. Right, I'm just going to have to leave it, guys. We'll give it another minute or two, and we'll call this the last one. Any questions? Anything else you'd like me to go over just before we call it a day? Okay, Aussie dollar yen. Yeah, see what Marcus is looking at. Swing in the market, directional move. Market. Let's just double check this. Is the market adhering to? Okay, it's not going to be a low and tight flag. Well, not yet anyway. It could be a triangle. Let's go and do the high time frame analysis on this, guys, and see if this is going to be a valid opportunity. Not so bad down south. Yeah, that's where I wanted to move, Simon. But I actually have to come back and buy about 15 houses. And it's going to take me about 18 months to do that. And by that time, my daughter will be a year away from doing her GCSEs. And I can't take her out of school, so I've actually got to be here for 2 years, 8 months. But come 2 years, 8 months, I am out of here. I'm South Devon. That's where I'm moving to. That's where I want to move to. Beautiful down there. We always go down there every summer. So much warmer down there, and it hardly rains. Not like Manchester. Bloody awful in Manchester. Sorry for any Mancunians. So, on the daily time frame, let's get this done because I do have appointments. So, move lower, pull back, move lower, pull back, move lower. Then we've kind of double bottomed here, and boom, we've seen a move up to the middle of this structure level just here. Okay, let's zoom in. What do we have? We have, first of all, the RSI that went overbought, and that happened after a very nice big bullish rally. We saw a the market running out of steam just here, and boom, a great big lower low, lower close candle. Is there room for the market to come lower? As a minimum, I would expect the market to come into this level. So the market has got room to come lower here based on the daily time frame. Let's go down to the 240. Simon says, great place, love Cornwall. Yeah, Jurassic Coast. My kids love Paynton. They love just everywhere around there, to be honest with you. You're pretty much within an hour of everything, an hour's drive of everything, so really like it down there. So guys, look what we've got. This was similar to the Aussie dollar CAD, I think, where we had the directional move. Then we saw the market struggling and running out of steam, and then boom, violating this level of structure very directionally. And so this is going to be, I'm actually going to wait for this to be a low and tight flag. First of all, I'm just going to put a structure level on here, make sure it's not a double bottom. Let's look left. There's no structure there that would say that this is a valid double bottom to me. So yes, great find, Marcus. Swing in the market, directional move. Okay, I'm going to be waiting for this to be a low and tight flag. And the reason why I think it's a low and tight flag is because even though we haven't come up for the fourth test, which I'm going to be waiting for, is if this was a triangle, then look at the angle. Okay, we don't typically see angles like this. The angle is usually significantly steeper. And that's it, guys. That's all it is. So for me personally, I'm going to be waiting for the market to come back up for the fourth test. And this is going to provide a very nice reward to risk. If we can come up for that fourth test. So 1, 2, 3, 4. We're going to be looking for that 127 extension. And now this is quite a long pole, and that means that we've got extended targets, bigger targets, which means we will get a better reward to risk. And if we just zoom out and look left, then you can see that that target, that 127 target just there, is coming into previous structure. Okay, so there's room for this to come lower. So a very, very nice opportunity indeed. Again, if this is a valid triangle for you, well then you've already had the lower low, lower close candle. Get involved now. For me personally, I'm going to be waiting. If we can come up to this level, yeah, it's going to be a nice 60 pips. That it's also on the Aussie dollar yen, so I'll be fine to hold that over the weekend, guys. So Marcus, thank you very much. Very nice find. I'll put that up there. Make a note of that as well. Aussie dollar yen. So that's it, guys. Thank you very much for joining me. Have a great weekend. Wish me and yourselves the best of luck with these trades that we're currently in, and I will see you all on Monday. Take care for now.